What credit score do you really need to buy a house in 2026? Okay, I'm going to ruffle some lender feathers here, so stay with me. Most people think that you need a 750 credit score to buy a house. That's not true. Other people think that you only need a 580 score and they think they're good to go. That's not the whole story either. I want to tell you the whole story, but first I need to let you know that every single lender is different. They all have their own criteria on what they'll accept, what they won't. If a lender tells you that you do not qualify, you need to get a second opinion, or at least an opinion from a mortgage broker that looks at more than one lender, okay? Here's the deal. Your credit doesn't just determine if you get approved. It determines what you're going to pay for the next 30 years. So it's kind of a big deal. And buyers have no idea how much that difference actually is. So I'm going to show you the real numbers right now. I'm Dave with KeyPath Mortgage. I work with buyers at every single credit level every day. Let me break this out for you. The minimums, the sweet spots, and the number that actually saves you the most money. Every loan type has its own floor. Here is where each one sits. FHA loan, the minimum is 580 to get the 3.5% down. Drop below that 580 to a 500, you can still qualify, but you're going to be putting 10% down. Below 500, it's not going to happen. Conventional loan, technically the floor is 620, but I'm going to be honest with you, at 620 you're going to get hit with high rate adjustments and higher fees. Probably going to go to FHA at that point. You want to be at least a 660 minimum to get reasonable terms. 680 or above is where conventional starts to make real sense. The VA loan itself has no minimum, but most lenders set their floor at 620. Some go lower. If you're a veteran sitting at a 580 to 619, it's worth shopping around because there are lenders that will work with you. You just have to find the right ones. USDA loan, 640 is kind of the standard minimum. So those are the floors for the various loan types. But the floor is not really where you want to be, right? So here's where what nobody talks about enough is the difference between a 680 and a 740 score isn't just whether you get approved, it's where that interest rate is. On a conventional loan, lenders use what's called a loan level price adjustment, LLPA. The lower the score, the higher the rate, and those adjustments stack up. Let me put real numbers on this to give you an idea. So $500,000 loan, 30-year fixed. At a 680 credit score, you might be looking at a 6875. That's just an example. Monthly payment, roughly $3285. At a 740, same loan, same lender, you might be a 6.375. Monthly payment, roughly $3120. That's $165 a month, over $1,900 a year. Over 30 years, that's nearly 60 grand extra interest just from a 60-point score difference. 60 points on your credit score is $60,000 over the life of the loan. That's not a small thing, right? So what's the sweet spot? Here's my honest answer. For conventional, you want to be at a 740 or above. That's where most lenders stop penalizing you on the rate. Above a 700, the improvement gets marginal. Below a 740, every tier starts to cost you. For FHA, 620 and above gets you the best FHA rates. For VA, get to 620 and you're in pretty good shape. VA loans don't get hit as hard on credit adjustments as conventional, so your credit score can vary a little bit, and it's not going to affect the interest rate as much. Conventional, much more so. That's one of the reasons it's such a great product, the VA. So the target for most buyers sitting at a 680 right now, get to a 720. That's one move that can save you hundreds of dollars a month. On a $500,000 loan, I've seen people delay 90 days to hit that number, and sometimes it's worth it. All right, so here's the move that people often sleep on, and it's the fastest way to move your score. The credit utilization ratio. That's the balance you're carrying on your credit cards versus the total amount that's available to you. It's a big chunk. It makes up about 30% of your FICO. Here's how lenders actually look at it. So let's say you've got a credit card that's got a $20,000 limit. You're carrying $14,000 on it. That's a 70% utilization. That's hammering your score. Now here's the key that most people miss. It's not just your total utilization across all cards. It's the ratio on each card too. So even if your overall utilization looks good, one maxed out card can drag you down. Let's say you have 3 credit cards. One of them you have completely maxed out. That one credit card that's maxed out is going to drag your whole score down. The sweet spot, 25 to 30% on each individual card. Under 10% is even better if you can get it there. On that same $20,000 card, get the balance from a $14,000 down to a $5,000. And watch what happens to your score. I've seen clients, their score will jump 40 or 50 points in just 30 days from that one move. This is always the first place I look when someone comes to me and says, hey, I need help to improve my credit score. Okay, cool. So how much are you carrying on your revolving accounts? The revolving has the largest effect as far as their accounts and utilization. So here's another move that a lot of buyers don't know about is the authorized user strategy. I don't want to tell you to go do something and tell you it's absolutely going to work. Maybe it will, maybe it won't. More often than not, it will. But essentially, you can find a family member or somebody that you trust or they trust you, a parent, a spouse, a sibling, someone down the street, if he's awesome or she's awesome, who has a credit card with a long history, a high limit, and a low balance. You can ask them to add you as an authorized user on that account. You don't need a physical card. Just being listed as the authorized user, you take on that user's history. Let's say they've had a card for 10 years, right, or 15 years. They've always paid it on time. They only use about 8% of their limit. You just inherited all of that positive history. Pretty awesome. And that just happens in 30 days or whenever it kicks in. I've seen buyers using that strategy jump 30 to 50% just from that one move alone. Combined with paying down your own utilization and using the authorized user strategy, you can make a serious move in 60 to 90 days. Now on the flip side, only do this with somebody that manages their credit well, right? If they miss a payment or they carry a high balance, guess what happens? That hurts you too. So choose your friends wisely. A couple more quick ones. Don't open new accounts just before buying. Every hard inquiry can drop your score a few points. That's why when you talk to your loan officer, they're like, don't go buy anything, don't get a new car. Besides the fact that if you go get a $500 car, that's going to affect your utilization. That's $500 less house a month that you can purchase. So no credit cards, nothing until after you close. Don't go close your old accounts either. Length of credit history matters. So if you go close an account that you had for 20 years, then you lose that 20-year history. So leave it open, at least until you're finished with purchasing your home. Put a small recurring charge on it, keep it active. Another one is the medical collections. So under the new scoring models, medical carries much less weight than it used to. So don't stress over those. Talk to us first. Let us help you with it, okay? Focus on the revolving credit utilization first. That's your biggest lever. All right. So look, here's what I tell every buyer that comes to me worried about their score. If you're at a 580 and you want to buy in 60 days, you need to make some moves to make that realistic. If you give me 90 days to work on it, I can tell you what to do with your utilization. There's a good chance we can bump that score up. Get added as an authorized user, pay down everything, leave everything else alone, and I've seen people move 50 to 70 points. It really happens. So if you were my friend sitting across from me, I'd say let's pull your credit right now. We can do a soft pre-qual that does not affect your credit, show you exactly what's hurting you, and then let's build you a 90-day plan, show you what you need to do, and go from there. You don't need perfect credit. You just need a strategy. Bottom line, the minimum starts at 580 for FHA, unless you want to put more down. That number that saves you more money, or real money, is a 740 with a conventional, okay? And the fastest way to get there, attack that utilization and add an authorized user. On a $500,000 home or loan, every 20 points you move up puts you real dollars back in your pocket every single month. So if you want to know exactly where you stand and what it's going to take to get to the number that saves you the most, my team at KeyPath does a free mortgage strategy session. We'll pull your credit, we'll look at the options, your debt ratio, give you that 90-day plan so you know what to do. Worst case scenario, you're going to get some great information, walk away knowing exactly what to work on. Links in the description.